All right, everyone. Welcome to today's webinar. Jerry D'Ambrosio here. I'm the manager of educational content with VectorVest. Hope everybody's doing well. Just want to do a quick sound check before I officially kick things off, just to make sure you guys can all hear me, can see my screen. I want to join those of you that are here via GoToMeeting, and we are streaming live on YouTube as well. So if you guys don't mind, just let me know. A pretty nice turnout here for a Thursday afternoon, right about noon. So let me know in the chat box that you can hear me. I see Mahesh is here. All right, guys, welcome. My name is Jerry D'Ambrosio. I had myself muted there for a second. Just want to do a quick sound check before I officially kick things off. I want to welcome everybody joining us via YouTube and GoToMeeting. If you don't mind, those of you joining us via GoToMeeting, so I can see that you guys can hear me okay, type in something in the chat box. There we go. John says yes. Adam says yes. Rick says sounds good. Awesome, guys. Fantastic. We are live, right, in the Charlotte, North Carolina area. It's a little windy today. Nice weather, though, 75, partly sunny. I'll take that on February 16th all day. I grew up in New York, so I know cold, and it's pretty cold in February. Normally, I know it's kind of mild up there now. I got a few friends that still live up there. They're golfing today, so it's pretty mild up there as well. But would love to hear from you guys. Where are you joining us from? It should be colder there in New York as well. Yeah, so John says snowing in Wisconsin. Adam, welcome from Virginia, right up north from where we are. One state, right? Yep. Thomas from Minnesota. Kevin from Florida, fantastic. Martin from Toronto. Awesome. Well, again, nice turnout here, guys. I really think you guys are going to enjoy today's webinar. This is one of the first times that we've given it. That we delivered this webinar, so I think everybody here is going to take something from it, really to start implementing right away. Again, my name is Jerry D'Ambrosio. I'm the manager of educational content here with VectorVest. This is our education team. I'm very proud of these folks. By the way, I have Jim Penna in the background. You guys might know Jim from a lot of our retirement courses. He leads up our retirement coaching group. He will be in the background answering any questions that you guys have along the way. I try to spend some time at the very end to answer questions because I have a lot of content to cover. So if you have a question, just ask. I'll save some time at the very end to answer those questions. So as I was saying, very proud of our education team. We've come a long way over the years. I'm with VectorVest now 16 years. When I first started, there was one guy in the education department, maybe two. Steve Chappell, the gentleman right to the left of me there. My left, your right. Anyway, but it was Steve and maybe one or two other folks, and you could see how we've grown over the years. And back then, our education focused really on the VectorVest program. Our method of analyzing the market, VectorVest method of analyzing stocks, how to build watch lists and run searches and create portfolios and run backtests. That was it. And over the years, we've evolved, and now we teach folks how to trade options. Ron Wheeler heads up our options department, and like I said, Jim manages our retirement services department. He helps you manage retirement portfolios. Steve and I work in what I call the swing trading faction of the department, because we've kind of broken the department up into different different segments. Everybody wants to learn different things about how to make money in the market, and there are many different ways. So really proud of our team. Hopefully you guys get to meet some of these folks along the way. So here's what you're going to learn today. We're going to talk about the difference between fundamental investors and technical traders. There is a fundamental difference, don't mind the word, but there is a strong disagreement between who is right, okay? What then we're going to talk about is the VectorVest method of merging the two. Now, this concept of merging fundamental valuation with technical analysis is not a novel approach. The very best traders and investors always pay very close attention to both the fundamentals of a company and recent price action or price behavior. Then we'll talk about how to quickly and easily identify the best trades. That's always a big part of investing, right? You can learn theory, and theory is important, how to trade different systems, but then you have to go out and find those trades, and I'll show you how to do that very quickly and easily. I think this will help. I do have a lot of content to cover. If you guys stick with me to the end, I will share with you a copy of today's slides. Just somebody remind me at the end. We'll be together for about an hour. So right close to 1 o'clock Eastern time, say, hey, Jerry, don't forget the slides, and I'll put them in the handout section of your GoToMeeting control panel. Okay? So let's talk about the two different camps of investors. Okay? There is the fundamental analyst. Okay? A fundamental analyst evaluates a company to determine what the true worth of that company is. And they will look at indicators, not only macroeconomic indicators, but a company's financial statements. They'll look at macroeconomic indicators such as earnings, inflation, and interest rates. By the way, we in VectorVest right now, we are in a case 3 bull market situation. If you guys read the views from last week, if you're a VectorVest subscriber, you read the views. You know what that means. That means that earnings and interest rates are rising, but inflation is falling. Okay? Still in a bull market scenario right now. I'm not sure how long that's going to last because our earnings trend indicator is falling very, very rapidly and approaching the level of 1. Once it crosses below 1, then we enter into a bear market scenario. So what a fundamentalist's job is they analyze the company to determine the intrinsic value. They don't worry about price. They could care less about what the current price of the stock is. They actually analyze the company as though they were not even listed. They make their buy decisions on whether the stock is now then trading at a premium or closer to its fair value. Okay? You can also apply this type of analysis to all different types of markets, currency markets, commodity markets as well. Next is the technical analyst. Okay? Technical analyst is based on price data alone. Okay? The objective is not really to predict what's going to happen in the future, but just to identify likely situations or likely scenarios of favorable price action. Price action is used, as an indication of how traders behaved in similar situations in the past. A technical trader will use, different price chart patterns, and they'll follow trends. They'll use support and resistance, use other different types of technical analysis indicators to identify trading opportunities with a high probability of success. Okay? They don't consider the underlying business or any other economic factors that might affect the value of the company. Okay? So who's right? Who's right? Well, if I was in the room with both of these fellas, I would in ways tell them, hey, listen, you're both right. Okay, the difference between the two approaches comes down to, what determines value and the current price. Again, a fundamental analyst will consider the value. Okay, they do a lot of research and work in determining that value. They'll look at a company's financial statements, and they'll also, again, look at the macroeconomic factors. Technical analysis is concerned with price only. That gives them clues as to, the supply and demand balance, which is ultimately what determines the stock price. Patterns do often repeat themselves. Okay? And that's what traders or technical traders are banking on when they take trades. Okay? So what our job is, and again, both have merits, both have been proven to be successful. They don't have to be considered, separate. What our job is to merge the two, okay, is to blend the two together, looking at a stock from both lenses, okay, and I'll explain what I mean by that in a minute. Let's take an example here. February 7th, 2023. just a couple of days ago. Got a stock like McKesson Corp, MCK. VectorVest has a suite of both proprietary fundamental and technical analysis indicators that help make determining what a stock's value is a lot easier, because if you're trying to determine yourself what the current value of a company is, that's going to require a lot of work on your part, right? Because you got to go through those financial statements. You got to crunch the numbers, even if you're even able to do that. You get a lot of data. There is plenty of data out there. A company's going to release every piece of data. Public companies are going to release every piece of data that they have, and it's your job as a fundamental analyst to determine what the true value is. With VectorVest, you don't have to do any of that work. We give you every day the value of any company every single day. So right off the bat, and that value, by the way, is based on all of that data, right? So VectorVest takes data. We spit out actionable, useful information. Okay, we kind of do the work for you. So with a current price or a price as of February 7th of 2023 at $363.61, we think it's worth $503 and change. So great. You're investing into a company that is trading less than what we feel it's worth. Don't you want to do that with every investment that you make? Right? You buy a house, you buy a car, you're trying to get the best price. You're trying to buy an undervalued asset. Okay? So far, so good. The next two indicators are both fundamental indicators. Again, the data that's included in those two indicators is the same data that you need to gather yourself as a non-VectorVest subscriber, right? Gather yourself, crunch, and then figure out, number one, what's the long-term upside potential here? Long-term upside potential might be determined by what? Is the company profitable? Do they have solid earnings? Do they have good earnings growth, right? That directly will correlate to the future value or the upside potential of the stock. Well, with an RV, relative value, it's the upside, long-term upside potential. We're looking at an excellent rating of 1.45. Great. Not only is it undervalued, but I got some really nice upside here over the next 1 to 3 years. Relative safety is an indicator of risk. It looks at earnings and consistency and predictability of earnings, and other factors like debt to equity ratio, sales volume, how long the company's been in business. Again, a lot of data that we crunch, and we spit out a number here with RS. It's on a 0 to 2 scale. Above 1 is good. So it's a relatively safe investment. We're looking at this right now through the investor's lens, aren't we? Right? The fundamentalist's lens. We're analyzing or determining value. We're determining whether the stock has favorable upside potential over the next couple of years. Is it a safe investment? Right? We could look at other fundamental data within VectorVest. Earnings growth rate, GRT, is at 21%. That's fantastic. You want earnings growth rate to be greater than the sum of current interest and inflation. I think current sum is about 11% now, roughly somewhere between 10 and 12%. That's the current sum of interest and inflation right now. Inflation is 6.5%, and interest rates are close to 5, right? Maybe 6. So anywhere between 10 and 12% is good. We're at an earnings growth rate of 21% here. There's your earnings yield, GPE. They pay a dividend, which is good. So you have a fundamentally sound company right now, right? There is no reason, let's take a look at a chart. There is no reason why a stock like this should not be at least considered for a long-term type of portfolio. Would everybody agree? Right? If you don't agree, what exactly are you looking for, right? What are you looking for? Look at the earnings there over the last year. By the way, the snapshot of the data that we just looked at was from February 7th. The hard right edge here is the beginning of October of last year. I'll explain why in a moment. We're looking at this through the fundamentalist's long-term investor's lens, and there's nothing here that would make me say, nah, you know what? I don't think this is the type of stock that I should keep in a longer term portfolio. Look at the rating at the top. buy and hold during this 1 year time period, never got a sell rating. Doesn't matter what the market's done over this time period. Theoretically, you're still in this investment, right? Even though we get a confirmed down, what do we say? We get a confirmed down. We say, hey, don't buy any more stocks. Let your stop criteria take you out. A very reasonable and widely used exit criteria for a long-term investment is the recommendation equals sell. So you could see that the stock never went below the stop price, and it's just off of its 52-week high as of the hard right edge. Okay? So if this is a stock in your portfolio and you begin to get good at or understand the technical aspect of the stock's price, there's no reason why you can't look at the stock, let's say as of the hard right edge, and say, that looks like it's setting up rather nicely for a short-term swing trade, right? Let's look at it now. Let's take our fundamentalist lens off and let's put our technical lens on. I put volume at the bottom and I got support and resistance at the top, and I've just zoomed in to basically the beginning of October of last year. What do I see now? Let's, again, looking shorter term, more recent price action. I see price settling in there to what's called a demand zone. It's a support area, right? It's a support area. This white line running through price is support. Now, it used to be resistance. Buyers had a really tough time breaking price above that $340 level until the beginning of August, when they finally were able to. Price has now settled back into that same zone. So what was a supply zone is now a demand zone, and there is a true battle right now going on between buyers and sellers. Right? Buyers are trying to push the price off of 340 and sellers are trying to push the price below 340. So if I'm a trader, if I'm a swing trader, I'm looking at this and saying, boy, I would love to take this trade if it breaks out. I look at a breakout level there of the most recent high. I'm saying, okay, if price breaks out above that level, you get a clear retracement off of support. The battle is over. The bulls win. I like to see some good volume there on that breakout as well. But as a trader, that's a beautiful opportunity to take a short-term position. Have you completely disregarded or not paid any attention to the fundamentals of the company? Absolutely not. We did that already, right? This is not stock XYZ, and it's, I know it's $340, so, higher dollar stock. We're not talking about a $5 stock here with poor fundamentals, right? Low RV, overvalued, risky investment, negative earnings. That's not the type of stock that we're looking at here. To increase your probability of even a successful short-term trade, it would make me feel more comfortable trading a company like McKesson that does an excellent job of continuing to grow their earnings every quarter, and their earnings growth rate is fantastic, and they're undervalued, and they got good upside potential, and they're a safe investment, right? So we are marrying the two. We are marrying technical analysis with fundamental valuation and fundamental analysis to identify, in this case now, a short-term trade. Now, I'm going to get to something in a moment where, let's say this is a stock that you don't own, right? It's a stock that you don't own. You're a fundamental, and you're really looking at this in terms of, this is a stock that I want to hold in my portfolio and really be considered a core holding, okay? I want to hold on to it for a long period of time. I love the growth of the company. I love the upside. I think it's a safe investment, right? All of the fundamental analysis that we've just did. But now you're looking at a better buying opportunity or a better buy level, right? Some of the best times to buy these types of growth stocks is during or right after oversold situations. So if you're a fundamental investor, you're trying to maximize returns, aren't you? Right? If, again, you're looking at an asset here, and you're going to pay $300 and change per share. You want to get the best price possible. Just like when you're buying a house, you're buying a car. If you're buying anything, you're trying to get the best price possible. So you understand that this is a great long-term holding, but you want to get a good price and you want a favorable price and volume situation before you do take the investment and buy the stock. So there's a couple of different ways to really look at this. There's the technical trader who is really just looking at a short-term trade here, doesn't own the stock, but understands the fact that it's a fundamentally sound company, and that's going to increase his or her odds of a successful short-term trade. Then there's the fundamentalist who isn't in the company or isn't in the stock, is looking for a good buying opportunity, and is paying attention to the technical behavior and short-term price behavior, and understands support and resistance and the importance of volume, which, remember, the fundamental investor doesn't consider initially. Everybody with me? So nice breakout that following day. There's your entry there. All right, you got some pretty good volume, almost 1 million shares traded. You got a really solid breakout, a retracement off of support, a new little mini high. Stock broke out of that little mini channel that it was trading in right at support. If you're a trader, you're taking the trade, right? You traders tell me, right? Is that a trade that you would take? If you're a short-term trader, a swing trader with a very short-term perspective, and you see a support retracement on good volume, and that's a pretty significant support level, right? You know, when resistance is broken, and this was pretty significant as well, 1, 2, 3 touches right in that resistance zone. When resistance is broken, that resistance level becomes support. And a lot of times what you'll see is eventually price comes back down to retest that zone. And it did. And it hung in that zone, it hung out in that zone for a couple of weeks and then retraced from it. It is an absolute ideal entry, ideal buy situation there for a short-term trade. It's also an ideal buy situation there for a longer-term investment as well. Okay? I know it's a hold rating, okay? But just in terms of the short-term price action there, it's a fantastic level. So let's fast forward a little bit. Oh, by the way, I added stochastics to the bottom of the chart because that's just another technical indicator. So what do we have? We have price not only hanging out at support, but the stochastics oscillator fell below 20. Stochastics oscillates above and below 20. Below 20 is considered oversold. Above 80 is considered overbought. So what did I say earlier? I said the best time to buy growth stocks is during or right after oversold price situations. And we are coming out of that oversold price situation right now. Right? Stochastics is rising as of the hard right edge. By the way, the breakout day there was October 4th. The hard right edge is October 4th. Okay, and you can see stochastics rising off its bottom, indicating a strengthening or emerging trend now. Okay? Now, worst case scenario, you enter the trade the next day because you got follow through the next day. You know, some traders will wait for the breakout and then trade follow through the next day. Others will just trade the breakout. So one of these 2 days here, either on the breakout day or the day after, early on, because you could see the high there of that day was above the previous day's close. You got your confirmation, you take the trade. Okay? Now you might be saying, well, wait a minute, October 4th, should I have bought? What were you saying? What was VectorVest saying at that time? Were you saying that it's okay to buy stocks? Were you saying it's not okay to buy stocks? That's very important, right? We always want to, have the market wind behind us before placing any trade, whether it's a long-term investment or a shorter-term trade. Okay, so here on October 4th, here we're looking at the VectorVest composite. Hard right edge is October 4th. You can see what the market did on October 4th, just completely blasted off. The MTI and the buy to sell ratio indicators prior to the blast off were below 0.6 and 0.20 respectively. So not only were those indicators below those levels, on October 4th you got your blast off. That's what we wait for, right? We say, look, when the indicators are below those levels, don't just load the truck up just yet. Wait for the blast off. Wait for the market to really start moving in your direction. It did so on October 4th. We got a primary wave up. We got a green light in the price column of the color guard. our guidance was that it is okay to buy stocks. I feel that's important to mention because I don't want to show you a trade that you theoretically, that you would have never taken, right? Always got to line up the market with the stock. Now here we're looking at McKesson again. This is a long-term chart, May of 20 to the hard right edge just a day or so ago. And I overlaid the confirmed calls on the chart. Confirmed down calls, confirmed up calls. If you heard me earlier, I said, when you're managing a long-term investment, a very viable and effective exit criteria is to use our recommendation equals sell. Right? Notice at the top, though, during this 2-year period, 2+ years, McKesson never got a sell rating. Not once. Price never closed below our stop price. So even though we got, a number of confirmed down signals since May of 2020, remember what I said. Confirmed down, what do we say? We say don't buy any stocks. Let your stop criteria take you out. If it does, don't replace it until a new buy signal comes. So you could be holding on to McKesson the entire time and trading these favorable price and volume situations along the way. What's to say that you can't do that? You hold McKesson long term. What's to say that you can't trade it in the short term? Right? Supplementing your long-term gains with shorter-term gains when you see a favorable price and volume situation, a moving average, a shorter-term moving average crossover maybe, or a MACD crossover. There's a ton of different indicators, guys, that you can use to identify shorter-term or better buying opportunities. Stochastics. I'm talking about support and resistance. RSI, again, a lot of different indicators that you can use. I wanted to keep things simple. Support and resistance is if there's one indicator that you should learn, it is support and resistance. So what I'm showing you here, and by the way, let me go back actually. No. Okay, so red line here. Let me go back a couple of charts. I want to show you guys something. The red line, so if I take this trade, and it's a short-term investment. Maybe you own the stock already, maybe you don't. But you're considering it a short-term a short-term trade. Now, if the entry for you here is at a level where you say, I think this is a good time to get in. I plan on holding it for the long term, though. You're not going to be paying attention to support and resistance anymore, are you? Right? I drew this resistance line on the chart because it, effectively connects the two little recent highs here, the level right at about 370 and change, where price had a hard time breaking above. If this is an investment for you, you don't care about that resistance level. You cared about the nice retracement off of support, giving you a strong buy signal, but your objective and your goal is longer term, so you're going to use the recommendation equals sell as your exit criteria. Okay, let's got to separate the two, because managing a trade is a lot different than managing a long-term investment. But as a short-term trader, if I'm buying off of this support level, this resistance level is a very, very important level. If price fails to break above that 370 level again, for the third time, what do you think you should do with your short-term trade? You should take profits at the very least, sell the entire position, and move on at the worst. Now, that's if we're fortunate enough to become profitable. What about if the trade goes against us? Where do you set your stop loss? Remember, this is a short-term trade, not an investment. If this was an investment, I wouldn't care about support. I wouldn't care if price fell below that support level. If it doesn't get a sell rating, you're going to stay in the investment. But as a trader, that support level is my initial stop loss. Very simple. Okay? Now, if you're using different indicators, your stop loss might be different. For example, at MACD, if you're using a MACD and you're looking at a bullish MACD crossover, A bearish MACD crossover might be the signal that you use to cut your loss. Okay? So going back to, I want to make sure you guys understood what that red line is. I know it's hidden by the quick test. But from our buy signal to October 26th, stock went up 8.5%. What did it do, guys, at resistance? Did it hesitate? No. Did it retrace? Did it pull off of pull back from that resistance level? Nope. What did it do? It blasted through it. And it did so on some really strong volume. But now I'm looking at October 26th as a day where I got to start thinking about taking gains. Okay? Stock's up 8.5%. That's 140% annualized. I'm not saying you're going to make 140%, but just to put that short term, that 8.5% in perspective and making you realize how significant of a gain that is in a very short period of time. Okay? So I want to think about taking profits off the table. Now, what happens over the next couple of days? The stock continues to move higher. Fantastic, right? Fantastic. We are, though, now entering into a very overbought price situation. Price is pulling really far away from that resistance level. Hard right edge now, what I see is what's called a one black crow. That is a bearish candlestick reversal signal. Okay, it's a bearish candlestick reversal signal. It's a pretty reliable one. You can see the filled red candle there, that down day. Really strong volume on that day. So remember where we entered? I'm going to start thinking about taking profits if I see follow through the next day. And we did. Clearly saw follow through the next day. You're taking your gain off. And what are you doing? Well, has the fundamentals changed? They haven't. Fundamentals hasn't changed. What's to say that you can't take your gain, continue to watch the stock, and identify a better buying opportunity, another buying opportunity? Well, what's another buying opportunity? Okay, so ready? Here is it was resistance. Price broke through resistance. Okay. What did I say what tends to happen when price breaks out through resistance? Well, what did it do when price broke resistance here? It eventually came back down to retest that support. I expect the same thing to happen. Okay? I expect price to come back down to that support level. It looks like it's on its way there off of that one black crow, but remember, you took your gain off. You're waiting for a more favorable opportunity. I would look for price to settle back in to this zone and then retrace from it before I take another trade. Let's take a look at what happened. Price actually went higher for the next couple of days. I'm not too worried about that. I'm not trying to squeeze out every last penny. But eventually what happened? Eventually, price came back down and retested that 370 and change support zone. So I said, if this was the hard right edge, I'd say, all right, it looks like it's settled in there nicely. I'm going to look for a retracement, follow the pointer, look for a retracement off of that support level to give me another buy signal. Well, that didn't happen the following day. Price crashed through that support level, and guys, look at what happened. Look at where it stopped again. Look at where it stopped again. It stopped at this lower support zone. Okay? Ezekiel says, need some guidance about when to take profits and when to add more. Good. Okay. Well, good. You're in the right place. Stay tuned. I'll talk more about that later. But look at what happened there. Price fell right back to that 340 support zone and retraced from it. Boy, the smart money really came in at that 340 zone, right? Almost to the penny, and picked up shares. You had an oversold stochastics as well. But here is your other opportunity. There's your support retracement again. There's your support retracement. Okay? Good opportunity there for a quick gain. You see some consolidation here, forming another resistance level. You take your gains off. Support and resistance, Ezekiel, and really for those that are looking for more guidance on when to take profits, pay and to add more, pay attention to support and resistance always. You can use other indicators as well, like I'm doing here with stochastics. But for a swing trade, resistance should be your first level at which to take profit. Okay, you'll find it somewhere, unless you're looking at a stock that's just, it's a 2-year high where there's no resistance in sight. It becomes a little difficult. Then you can apply different technical indicators like stochastics and say, okay, if I don't have resistance overhead, because we're looking at a 2-year high or a 1-year high, maybe there's no resistance overhead, but I'll apply like a stochastics oscillator and say, okay, if I'm in this trade and I'm fortunate enough to be profitable and the stochastics oscillator goes above 80, I know what tends to happen, right? This goes back to the technical analyst's belief in that the past repeats itself, and the behavior of traders in the past repeat themselves, during similar situations. So an overbought stochastics, what did price do in the past? An overbought stochastics, what did price do in the past? An overbought stochastics, what does price tend to do? Just like what it tends to do when it's oversold, it tends to rise. Okay? So where does that leave us as of the hard right edge? This is a day or so ago, guys. Do you see a buying opportunity? No, I don't. Why? Because we are currently in the middle of, well, first off, we're above this support level, and we're right below this resistance level. So I would either look for price to come back down to 340 and retrace off of it, or break above 370 and continue to move higher. So right now you don't have a signal necessarily. You have levels that you're paying attention to determine when to buy again. How's the investor's position doing here? Right? For the most part, you're looking, let's say August of 2022 all the way to current. You're not making any money, right? Your investment is moving sideways. It hasn't gotten a sell, so you're not out of it. But why not learn how to take advantage of these other situations where you could, in a stagnant investment, still kind of pad your trading account with some shorter term gains? Okay? Another example, February 7, 2023, United Health Group. Boy, I mean, if there's any type of stock, it's a healthcare company. It's, best of breed for sure. United is one of the better companies, right? Here in the U.S., healthcare-wise, healthcare companies. Price of $492. We think it's worth $509. Okay, so it's fully valued. Tremendous upside potential over the next 1 to 3 years. It is one of the safer stocks in the database. Earnings growth rate at 17%, earnings yield at 5%, PE ratio less than 20, which is considered low compared to the average of the VectorVest database. There's your growth to GPE. They also pay a dividend. Another stock where, not many arguments can be made as to why this isn't in your retirement or long-term portfolio. Here's a chart now. Now, this is August of 20 all the way to current. No reason why this stock should not be at least considered for your long-term portfolio. During this time period, there was one day where the stock got a sell rating. One day there. Okay, but for the most part, it's been a buy or a hold. There's your earnings per share at the bottom. Relative value, I know it's kind of tapered off here over the last couple of years, but that's no reason just to sell a stock. It's still at a very nice level there, above 1.3. RS is still strong. GRT is strong. Fundamentally sound company. I think we can all agree. Let's take our fundamentalists' glasses off and put our technical glasses on. Look at the support and resistance levels, along the way, and let's figure out, is there not only better buying opportunities for the long-term investment, as well as the better or favorable price and volume opportunities for a shorter-term trade. There are plenty of them. So here, this is December, January, February, March 2021. Price pulling off of resistance, pulling off of resistance, pulling off of resistance just briefly there before the bulls wind up taking control and break out through on some really strong volume above that resistance level. That is a trader's dream. That's what they're looking for. They're looking for the battle to be over. The battle between the buyers and sellers, guys, they tend to pick up momentum or fierceness, if you will, at these zones, at these support and resistance zones. These are inflection points. So when you finally see one side win, you take that side and you ride the stock price higher. Okay? You look for buying opportunities. Now here, right, as price approached this resistance level, you get a pretty significant retreat. Stochastics was overbought, excuse me. Stochastics goes from, see in this case, right, what is this, let's see, March, April, maybe April. There's no resistance overhead that I can see. We don't see all this data yet, right? So we're just looking here as the hard right edge. You got a new stock high. When do you consider selling your short-term trade that you took as after resistance was broken? Well, let's apply indicators, right? Let's apply technical analysis indicators, guys. That's what they're for. They help us make better sense of price, and they provide buy and sell signals. So worst case scenario, when stochastics goes from above 80 to below 80, you exit your trade. You look for another buying opportunity. Has the fundamentals changed? No. Kind of here's where we are now. Has the fundamentals changed? No. We can agree now. I don't have to keep coming back to this chart, but every opportunity here along the way, you're doing so. You're taking advantage of a fundamentally sound company, right? The fundamental kind of analysis needs to be done almost simultaneously along with the technical analysis, because why waste your time analyzing the chart from a technical perspective if it's not going to be a trade that you take because the fundamentals are poor, right? They got to be done simultaneously, and very easily we can do that within VectorVest. Okay, just like the fundamentalist, right? The fundamentalist has to analyze the stock's fundamentals, but if he or she is looking for a technical breakout to take the investment, it's got to be done at the same time. Okay, here's another opportunity. Stochastics. Well, first off, now here, price approached the same level. It failed to move higher, retreated back down to this, it looks like 375 support zone, retraced from another fantastic buying opportunity. Then what happened? Price broke out above that 440 and change resistance level. And what did it do? It came right back down, guys, and retested it. Retested it and retraced from it. It is not a coincidence that price starts and stops at these levels. It's not a coincidence. Traders are looking at these levels and determining how to act. Am I buying or am I selling? That's kind of the ultimate decision, right? Am I buying or am I selling? And a seller is going, or someone who owns a position or is in a position is going to consider selling if the supply zone fails, if the resistance level holds, right, and price retraces from that resistance level. They are going to take their profit, just like the buyers are going to look to enter the trade, or bulls are going to look to enter the trade if the floor holds, if the support level holds, and then retraces from it. So I could just continue to move here from left to right at all of these beautiful support retests and retracements. These are all buying opportunities. Now what happens is price breaks above resistance, and it creates now a higher demand zone, right? A higher support level. And you're just kind of ratcheting up and continuing to take advantage of these retracements off of these support levels. If you own the stock, guys, what's happening? Not only are you making money on the stock long term, but you are supplementing those long-term gains with shorter-term gains because you got good enough to be able to trade this way. Some of you might not be able to do that, right? If you're a fundamentalist, you may have heard of support and resistance before. You may have heard of stochastics, but you have no idea how to use these indicators really. And if you're a technical trader, I mean, what do you know about earnings per share and earnings growth and PE ratios and growth to PE? So marrying the two really increases our probability of successful trades and then eventually long-term investments. Okay, so we could just keep going. Now here we dropped into that 440 support zone again. Right now, hard right edge, guys, just a couple of days ago, what am I looking at? I'm looking at price approaching resistance again. So what I would look for is, of course, a break above that resistance level, that almost $500 resistance level. That's my next buying opportunity or my next trade. Right? If you're not in this stock, right? Let's say you're not in it. It's not a swing trade. It's not an investment. But you want it to be an investment. You want it to be a long-term investment. Well, we've done the work in terms of the fundamental analysis. You're looking for a buying opportunity here. I think that buying opportunity is also when price breaks above that resistance level. There's your buying opportunity for your long-term investment. You could wait till it gets a buy rating for sure, okay? But using these support and resistance levels really gives you an edge. The question becomes, how are you going to find trades, right? Because we're learning a lot of theory here. Okay, learning a lot of theory. Give me 1 second. I'm sorry, guys. But how are we going to put it to practice? There are different ways. There are different methods of finding trades. There's the one-by-one method. This is not my preferred method. Time is a commodity. I don't like to spend a lot of time looking for investments, looking for trades, and of course, VectorVest streamlines it for you because we take all the data that the market absorbs and we spit out indicators and again, useful, actionable information. I don't like the one-by-one method. Is essentially, guys, hey, you got a list of stocks, analyze it for both the fundamentals and the technicals at the same time. You got to look at the charts. You want to find favorable situations where you could take these longer-term investments. I like to use a search. I like to use our Unisearch tool. Unisearch tool within the tool, you can not only search for fundamental analysis or fundamental data, fundamental indicators, but you can also search for, with our Pro Trader tool, technical indicators as well. So for example, guys, this is not the holy grail of searches. This is just an example, kind of a somewhat of a 30,000-foot view of what we're looking for. And again, this is an example. We're looking at a search called Prudent Performers. It's a search that's in the Unisearch tool. It's in our Prudent Strategies Prudent folder. And it finds fundamentally sound companies, doesn't it? Right? Look at the indicators. We're looking for earnings growth rate to be greater than or equal to 15%. We're looking for relative safety to be greater than or equal to 1.15. We're looking for relative value to be greater than or equal to 1.25. Right? So fundamentals are there. Solid fundamentals. We'll sort the list by VST. That brings the best stocks to the top of the list. The last parameter that you see there is if you were to add a technical indicator to the scan, essentially trying to find the companies whose fundamental indicators are favorable, but also just coming off of an oversold price situation. Growth stocks coming out of an oversold situation. Really a solid time to buy those stocks. So there's February 14th. I only had a couple stocks that returned from the search. AEHR. By the way, let me go into the VectorVest program here. Let me just show you that search real quick. Okay, this is when I like to get into the program a little bit. I'm going to go to search as prudent, and I'm going to go to prudent performers. I'm going to add that parameter to the bottom of the search where I'm looking for stochastics. That's included in Pro Trader. This is an add-on module to the VectorVest program. I'm going to look for stochastics to have crossed above 20 in the past day. And if I take our date back to the 14th, which was the green light in the price column of the color guard, got two stocks. Okay. AEHR, VRTX. Let's analyze them. AEHR, all right, maybe a little bit overvalued. Price of 33.63 as of a couple of days ago. We value it at 21 and change. Not a great start, but we always say that it's okay to buy overvalued stocks if the fundamentals are there. And they are, right? RV, excellent, 1.48. RS, 1.24, also excellent. Relative timing at 1.86. Wow, that's really strong trend. Even though, this is interesting, even though the stochastics oscillator has just gone from oversold, right, crossing above 20, the trend is still strong. And we saw that on the chart. Scrolling over, there's your earnings growth rate. Neither pay a dividend, but that's okay. And there's your other fundamental indicators. If you want to look over its sales and sales growth, okay, AEHR, a little bit of a smaller company, 61 million in sales, but their sales growth is at 54%. And there's Vertex Pharma, a 9% sales growth there. But fundamentally sound companies. Okay, going back to our chart here, I also added another technical indicator that VectorVest has. It's called CI. It's at the bottom. It's in yellow. Comfort Index. Comfort Index. It's on a 0 to 2 scale. Above 1 is good. Below 1 is bad. You've heard of the Ulcer Index. The Ulcer Index rises the longer and further a stock's price falls. CI is the opposite. The CI indicator rises and moves closer to 2 the longer and farther a stock price rises. It's a long-term price trend indicator. It measures persistent growth, okay? So not only is the stock's CI rating above 1, well above 1, it just kind of crossed above 1. So you're seeing a stock here who has successfully demonstrated the ability to withstand these price pullbacks. Right, that's what a high CI stock does. It successfully withstands or is a little bit more resilient to these price pullbacks along the way. Price just recently pulled back. Stochastics went from below 20 to above 20. Is this not a good buying opportunity? Absolutely. Okay, here's VRTX. CI well above 1. Been above 1 for a while. We already analyzed the fundamentals, didn't we? Right? And you didn't really have, I mean, when you use Unisearch and you plug in the data and you plug in the numbers and you want the RV to be above a certain level and RS to be above a certain level, that's really your fundamental analysis, right? You don't have to, you could throw the indicators on the chart if you want to. You always put on earnings per share. I mean, you know, you really want to put on earnings per share no matter what, because that's truly the the engine that's going to drive the stock price higher and higher. You can look at all the other data that you want. You can look at sales and revenue and assets and liabilities. Earnings is it's going to inevitably drive the stock price higher. So always put that at the bottom of the chart as well. But boy, look at price now, guys. I know it's pulled back a little bit today, but boy, look at that. Just pulled off a new high. Stock has been nothing but a buyer a hold the entire time. But look at what happens. Let's go back historically. So this is what a trader is looking for, or a technician is looking for, right? Favorable price situations. Well, a favorable price situation is after an oversold situation when stochastics crosses from below 20 to above 20. Was that a good opportunity to take a short-term trade? Was that a good opportunity to take the short-term trade? Was this one? And again, we're seeing we're seeing repetition. We're seeing, and it appears that we're seeing, as of the hard right edge, the same type of trader behavior that we saw 1, 2, 3, 4, 5 times over the last year. There's your buying opportunity. Okay? So you might be saying, well, okay, this is great. How can I start to implement this? How can I take my game to the next level? You always have a choice. Now, the choices that you have, number one, do nothing. You could do nothing, kind of go about things the way that you have been. You could do it alone, maybe take bits and pieces of what I taught you here today, or you can let us show you. I used to be a teacher, and I not my proudest moment, but I used to give answers away sometimes. I want to give you the answers. I want to give you all of the answers. So the education team got together and we put together a course called Uncovering Trends, Technical Analysis the Easy Way. And what we do here, guys, is we merge the two. We merge fundamental valuation with the insights of technical analysis, and that is going to increase returns for both the longer-term investor and the shorter-term trader. So here's what you get. You get the complete Uncovering Trends program, 6 modules, slides, graph resource tutorials, and a lot more. You get access to the course for an entire year. You get first bonuses there is the mastery package. So not only do you have 6 training modules, we're going to be live 6 times. The modules are pre-recorded, but the mastery sessions are going to be live. I'll talk to you guys in a moment about the dates and times of those sessions, but we're going to be there to guide you every step of the way. You'll also get private dedicated email support. You'll also get access to VectorVest 7 Premium, which is our real-time data that includes the pro trader technical searches, guys, which become very important, for what we look to do here. You're also going to be invited to 6 swing trading coaching group sessions for the duration of the course. Okay, they'll begin on March 2nd. Myself, Steve Chappell, Dr. David Paul, and Stan Heller are your coaches for the swing trading coaching group, and you'll be invited to 6 sessions during the duration of the course. The course is valued at $1,990. The early bird rate is still available at $1,495. But guys, as a thank you, I want to give you guys the best rate that we have available for this course. That's $895. Go to VectorVest.com/trends. I'm going to ask Jim, if he doesn't mind, to type in the address that he sees, and you guys see there at the bottom, VectorVest.com/trends. Sorry, excuse me. So for $895, you get the 6 pre-recorded modules. You get the 6 live mastery support sessions. You get access to VectorVest 7 Premium if you don't already have it, and you'll be invited to 6 swing trading coaching group sessions. Now, this is 100% money back guaranteed. If after the course is over, you say, I didn't really learn anything. I don't think I benefited from the course. Just let us know. If you're not satisfied, we'll gladly give you a refund. Okay? Now, when are the live sessions, and what if I miss one? The live sessions begin on March 1st. There we go. Marv says, what if we miss the live sessions and can't join? They are recorded. They're uploaded to the university within 24 hours. By the way, guys, once you register for the course, okay, you'll get access to it. However, there is no content. The first module will be released Wednesday, February 22nd. And by the way, guys, thank you for the reminders. I put the slides in the handout section of your GoToMeeting control panel. You should see that you should see it now, actually. Okay, it says Uncovering Trends. It's a PDF. Because this is a brand new course, we've never delivered this course before, the modules will be dripped out, leaked out 1 week at a time. So the first module will be released on Wednesday the 22nd, which gives you a full week to watch it before our first mastery support session on March the 1st. The day after our first mastery support session, March the 2nd, will be when the second module is released, and so on and so forth. Okay, these are all Wednesdays, and the sessions begin at 1 p.m. And again, they will be recorded and uploaded to the university, within 24 hours. Okay. Here is the agenda. Here are the modules. Module number 1, we'll talk more about the differences between fundamental and technical analysis and really drill home. This is the foundation. This is really what's going to lead us through the entire 6 weeks. Um, Understanding both fundamental and technical indicators, and how we analyze both with VectorVest proprietary technical indicators. Module number 2, the different ways to view price. Trending, neutral, and extreme market environment. So we're going to talk about price and volume structure in module number 2. Notice how we haven't gotten into really any techniques yet, or any trading or investing strategies yet. The first 2 modules really kind of lay the foundation for when we begin in module number 3, and that's when we teach about bullish and bearish candlestick reversal patterns. We combine those patterns with technical indicators such as stochastics, support and resistance, and moving averages as well. Module number 4, guys, this is a technical analysis course, right? So we include about 15 different technical indicators, and those will be covered in module number 4. Moving averages, MACD, Bollinger Bands, RSI, stochastics, support and resistance, ADX, envelopes. What am I missing? RSI, I think I said. There's Fibonacci's. Dr. David Paul will teach you guys about Fibonacci retracements. By the way, myself, Stan Heller, you guys from Canada know Stan very well, Dr. David Paul, and Ron Wheeler, Mr. Ron Wheeler, who doesn't teach a lot of technical analysis or swing trading courses here at VectorVest. He's our options guy, but we are so lucky to have him as an instructor here. So you have the 4 of us for this course. Each guy gives you a different perspective, and really, gives fantastic instruction on some of the things that, we use the most. I said, hey, let me do the candlestick module because I love candlestick trading, and I use it a lot in my own trading and when I manage our swing trading coaching group portfolio as well. Okay. Module number 5, this is a lot of David Paul. If you've listened to David Paul speak, he really does a great job in talking about the psychology of trading and investing, risk management strategies, the importance of position sizing, diversification, and asset management. So we talk a lot about that in module number 5. And module number 6, we bring it all together, leave you guys with a plan moving forward. And we're also going to talk about the NPI, which is the near perfect indicator. So what I want you to do, guys, go to www.vectorvest.com/trends to register. If you're in, just type in "I'm in" the chat box. I'd love to kind of introduce you guys to the group. Always nice to get a name of a future student. If you're in, just type in "I'm in" the chat box. Now that $8.95 rate, guys, will go away in a few days. Okay, that is also the current elite price. So if you're an elite subscriber, the $8.95 rate is for you now as well. Now the normal elite rate is $9.95. That will kick in a couple of days once the $8.95 price goes away. Now, if you're not an elite subscriber and don't take advantage of the $8.95, unfortunately, in a couple of days, it's going to revert back to $14.95, which is the early bird rate. Awesome, Peggy. Peggy says, I am in. Awesome, Peggy. Looking forward to it. Remember, when you register and you go to the university, you're not going to see any data. Actually, I take that back. At the very bottom of the course outline, I recorded some graph resource videos, just some basic couple-minute videos on, how to add indicators, how to add moving averages, how to draw lines, how to save charts, how to change time frames. A lot of the stuff that we're not going to spend a lot of time with during the course. I made sure that you guys were, before the course even starts, are aware and able to manipulate the graphs, right? That's important, to be able to change time frames and draw lines and add indicators, right? You have those videos available now. So those videos are available now when you log into the university and get to the course. The first module is not. It won't be available until Wednesday of next week, February 22nd. Okay. Roger says, I'm in. Believed I signed in 3 weeks ago. Okay, Roger, you might have bought the course in Tampa. All right, Sally says I'm in. Awesome, guys. And my email address, by the way, is jerryd, Jerry, D as in David, @vectorvest.com. Any questions about anything that I went through here today or during the course? I said that you'll have dedicated email support. You'll have all of our email addresses. Mine, Stan's, David's, and Ron's. So any questions that you have during the course, after the course, on a particular topic that any of us taught, you guys can shoot us an email for sure. All right. Adam says, great, thank you. You're welcome. All right, guys. You have my email address again. It's jerryd@vectorvest.com. Any questions at all about anything that I covered here today, or any questions about the course, feel free to shoot me an email. But go to vectorvest.com/trends. Thank you, Jim, for typing that in the chat box. Again, that $8.95 rate, guys, will not be available for much longer. So take advantage of that low rate. Take care, everybody. We'll look to see everybody soon in a couple weeks, starting March 1st. Take care, everybody.